While you were watching silver hit new highs on your screen, something far more critical was happening in the shadows of the global logistics system. The metal left the building. Port authorities in New York and London confirmed that the volume of silver moved in the last 48 hours exceeds anything seen since the 1970s Hunt Brothers squeeze. The registered vaults at COMEX, the ones that actually back the paper contracts, dropped to functionally zero. The metal didn't evaporate, it immigrated. China executed the perfect drain, and the West just handed them the keys to the vault. This is how they did it, why the military-industrial complex is now facing a resource crisis, and why you cannot buy physical silver at any price that resembles the screen. The drain started with a simple price gap that became unstoppable. Silver in Shanghai has been selling for 18% more than silver in New York. Same metal, different price. That gap is free money. Here's how it works. You have a bar of silver. You can sell it in New York for 67, or you can sell it in Shanghai for 80. Which do you choose? Everyone chose Shanghai. Every refinery, every dealer. Every holder of physical metal made the same decision. Money flows to where it gets paid more. China offered more. The metal moved. The West pushed the price down to control the market. China used that low price to buy everything. They turned the West's weapon against them. The official numbers are starting to leak out, and they confirm what we feared. COMEX tracks two types of silver in its vaults. The first type is owned by private holders. It's sitting there, but it's not for sale. The second type is the silver that's actually available to deliver when someone demands their metal. That second pile just collapsed to 8.2 million ounces. But here's the problem. There are 600 people holding contracts for every single ounce in that pile. They sold the same bar 600 times. This is not a market. This is a shell game. They've been running a con, and the con just broke. If even 2% of those contract holders show up this week and say, "Give me my silver," the exchange will have to admit they don't have it. The vault is empty. But the real story is not the COMEX number. The real story is where the metal went. Swiss refineries, the ones that process nearly 70% of the world's silver, have been running 24-hour shifts for 3 weeks. Their output is not going to New York. It is not going to London. It is going to Shanghai. We have shipping manifests that show 340 metric tons of silver left Zurich in the last 10 days. That metal landed in Hong Kong, cleared customs, and disappeared into the Chinese mainland. Once silver enters China, it does not come back. They are not buying to trade. They are buying to consume. The arbitrage gap is not closing. It is widening. Yesterday, the Shanghai premium hit 22%. This morning, it touched 24%. The higher the premium, the faster the drain. Every refinery, every dealer, every institutional holder with access to physical metal is doing the same math. Sell to the West at $67 or sell to China at $85. The decision makes itself. The LBMA, the London Bullion Market Association, has been lying about its stockpiles for years. They use a system of unallocated accounts, which allows them to lease the same bar of silver to 10 different clients. It is a Ponzi scheme. But China does not buy unallocated. They demand allocated, segregated, delivered. When China showed up with billions of dollars in cash and demanded immediate physical delivery, the accounting tricks fell apart. We are hearing rumors of a soft default in London. Major institutional clients are being offered cash premiums to not take delivery. But China refused the cash. They took the metal. In doing so, they exposed the fraud. The fractional reserve system worked as long as nobody asked for their metal. China asked. The system broke. The drain is not about profit. This is about survival. The Chinese Communist Party knows that a conflict over Taiwan is no longer a question of if, but when. Modern warfare is resource intensive. You cannot build a hypersonic missile without silver. You cannot manufacture a guidance chip without silver. You cannot produce a fighter jet, a drone swarm, or an electromagnetic railgun without massive amounts of silver. It is the most conductive metal on Earth. By cornering the global supply, China is not protecting wealth. They are choking the U.S. military-industrial complex. They are ensuring that when the conflict starts, the West will face a critical shortage of the raw materials needed to build weapons. This is economic warfare disguised as commodity trading. Beyond the military application, China's industrial hunger is voracious. The Belt and Road Initiative is the largest infrastructure project in human history, and it runs on green energy. Solar panels require silver paste for conductivity. 5G towers require silver for signal transmission. Electric vehicles require silver for battery management systems and charging infrastructure. China already controls the refining capacity for rare earth metals. Now they have seized the silver. They looked at the geological data. They saw that global mining production peaked in 2016 and has been falling ever since. They saw that industrial demand is exploding while supply is contracting. They realized that he who holds the physical metal controls the 21st century. They are not buying silver to sell it back to us at a profit. They are buying it to consume it forever. Once this metal enters the Chinese mainland, it disappears from the global market permanently. It gets turned into solar panels that power factories in Shenzhen. It gets turned into missiles that sit in silos pointing at Guam. It gets turned into 5G infrastructure that connects 1.4 billion people. The metal does not get recycled, does not get re-exported. It vanishes into the supply chain of the world's largest manufacturing economy, and it never comes back. The numbers prove the strategy. In 2020, China imported 4,800 tons of silver. In 2023, they imported 7,200 tons. In 2024, that number jumped to 9,400 tons. This year, they are on pace to import over 12,000 tons. That is more than the entire annual mine production of Mexico, the world's largest silver producer. China is not just buying the surplus. They are buying the mine output before it even hits the market. They have signed long-term contracts with miners in Peru, Chile, and Australia. They have locked up future supply at fixed prices. They have cornered the market at every level of the supply chain. The West is waking up to the crisis, but it is too late. The U.S. Geological Survey recently classified silver as a critical mineral for national security. The Department of Defense released a report warning that domestic silver stockpiles are insufficient to support a prolonged conflict. The Pentagon is now scrambling to secure supply, but there is nothing to secure. The miners are already contracted to China. The refineries are already shipping to Shanghai. The vaults are already empty. China executed this drain while the West was distracted by inflation data and interest rate hikes. They moved quietly, methodically, and without fanfare. They did not announce their strategy. They simply executed it. And now, the resource that powers modern technology and modern warfare is in their hands. The drain exposed the fraud. The paper market is dying in real time. For decades, the LBMA's unallocated accounts operated as a Ponzi scheme. The same bar leased to 10 clients, the same ounce sold 100 times on paper. It worked because nobody asked for delivery. China demanded allocated, segregated, delivered. The accounting tricks fell apart. We are now hearing confirmed reports of soft defaults in London. Clients are being offered cash premiums to not take delivery. Some are being told their silver is temporarily unavailable due to logistical delays. This is the language of a system in collapse. China refused the cash. They took the metal. They called the bluff. The emperor has no silver. A force majeure declaration is now a question of when, not if. Force majeure is the legal clause that frees parties from liability when an unforeseeable event prevents them from fulfilling a contract. They will claim the silver shortage is a supply chain disruption. They will settle your contract in cash at a rigged price. This will be the moment the paper market officially dies. When they refuse to deliver metal, the price of the contract goes to zero, and the price of the physical metal goes to infinity. We are days away from this bifurcation. For the banks holding the short positions, the nightmare has just begun. JP Morgan and the swap dealers are short billions of ounces. They sold paper contracts they cannot cover. They are nakedly short in a market with no liquidity and no physical supply. This is a recipe for infinite losses. The Federal Reserve will be forced to step in and bail out the bullion banks to prevent systemic collapse. This bailout will require printing trillions of new dollars, which will only drive the price of hard assets higher. They are trapped in a doom loop of their own creation. As news of the drain spreads, industrial panic buying will begin. Companies like Apple, Samsung, and Tesla employ smart people. They see the data. They know the supply chain is breaking. They will stop buying just in time and start buying just in case. They will attempt to stockpile years of silver to keep their factories running. When multi-billion-dollar tech companies start panic buying a scarce resource, the price chart goes vertical. We will see moves of $10 or $20 in a single day. The industrial users will bid the price to whatever level is necessary to survive. You will see a price on the screen, maybe $80, maybe $100, but you will not be able to buy at that price. The dealers will be sold out. The mints will be closed. The peer-to-peer market will be the only market. You will have to find someone willing to part with their metal, and they will demand a king's ransom. This is what hyperinflation looks like. It is not just high prices, it is empty shelves. The silver is not expensive, the dollar is worthless, the vaults are drained, the ships are crossing the Pacific. The fiat currency period, 1971 to 2025, is ending. The resource-backed currency era is beginning. Nations will be ranked by the gold, silver, oil, and land they control, not the debt they issue. China positioned itself to write the rules of the next global financial system. Those holding physical metal are the new nobility. No counterparty risk, no default risk. China executed the perfect economic checkmate without firing a shot. They took the silver and left us with the debt.